Shares of McDonald's hitting a record high on Thursday. Welcome to Trading Nation. I am Brian Sullivan. Erin Gibbs with S&P Global. Rich Ross with Evercore ISI. Rich, we have been here, not quite here, but close to here before, and McDonald's disappointed. Do you think it will do so again?
You know, Brian, it's two charts. Let's start with the short term, where the story is very constructive. Consumer discretionary stocks have been a revelation, second best performing sector. Stocks like McDonald's, this is the fifth heavily weighted stock in the XLY discretionary ETF. That's helping to drive the ship here. And when you look at that chart, a textbook breakout from really an 18-month trading range. We'll call it 111 on the low end, 131 on the high end. That projects measured upside of another $20 from current levels, gets us to about 150, 153. So with the stock at 133, that's a nice buying opportunity. But when we zoom out, Brian, this is where the story gets a little funky for me. Call me superstitious, but look at the chart, Brian. We have a little bit of ominous symmetry here. Yes, we have a textbook breakout to an all-time high above that resistance. We had a 20% decline, sort of a 20% rally there. Now go back to April of 2013. It was April when I walked over here today. You had a very similar setup. 20% decline, 20+% rally. We push out to an all-time high in April of 2013. But Brian, that breakout to an all-time high from a very similar technical position fails, and the stock does nothing for the next 2.5, 3 years. So if this breakout were to fail and we were to drop back into the pattern below that 130 level, I would not be quite as sanguine or positive on the stock here.
Okay, Erin Gibbs, fundamentally, a view on McDonald's?
Yes, so we have McDonald's in a couple of our portfolios, and this is one of these transition stocks. They've gone through massive leadership and organizational changes. One of the biggest headlines that came out of it was using fresh beef instead of frozen in their Big Macs, and we think we're going to see continued changes going through McDonald's. But the real thing, the reason why we like it, is that it has consistent growth and a very high dividend. It offers about a 3% dividend yield, which for consumer discretionary is very good. But we're also expecting about 8% earnings growth over the next 2 years. They are facing some challenges with declining revenues, but because they're controlling costs, becoming more efficient, we're still seeing that really solid consistency on the earnings side, and that's why we like McDonald's.
Oh, wow. Like in McDonald's. And it's always interesting when the move to fresh beef is your big change, which apparently is getting people excited. Erin Gibbs, thank you. Rich, you're watching those levels that you brought up. Thank you both very much. Folks, thank you, as always, for watching Trading Nation. Happy trading. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.